Viewers, today we are going to cover the statement of profit or loss and other comprehensive income, the statement of changes in equity, and some parts of the statement of cash flows. For this, we will use the financial reporting question paper from the ACCA, sample questions from September-December 2001. So let's go to the requirement. We'll scroll down. Then we are given our scenario here, scenario 1. It's continued here, also there. Then our requirement, we are given our requirement here. Requirement A, prepare the statement of profit or loss for Mims Co. for the period ending 31 December 20x5, 12 marks. B, prepare the statement of changes in equity for Mims Co. for the year ended 31 December 20x5. C, prepare the following extract from the statement of cash flows for Mims Co. for the year ended 31 December 20x5. I, cash flow from investing activities. 2, cash flows from financing activities. So the approach that we will use today is through journals. We will use journals to achieve what we want today together. So let's format our cells so that at least we will not have problems. Then let's start here. We are given our trial balance here, where there is revenue, cost of sales, admin expenses, distribution costs, income tax, deferred tax, provisions, retained earnings, equity share capital 60,000, intangible assets, investment property, finance costs, investment income, suspense account. So if we are given suspense account there, it means something went wrong that needs to be corrected by us. So we'll do the correction, then we proceed. Then now we'll be doing journals notes by notes. So we'll start with note number 1. Note number 1, Mims Co noted there was an error in the inventory count at 31 December 20x4, meaning that the closing inventory balance in the 20x4 financial statement was overstated by 0.7 million. No entries have yet been made to correct this error. So this error has not been corrected. Now let's do the correction. I would like to be working in thousands. So I will tell the examiner I am working in 1,000. Then under note number 1, if the closing inventory for 20x4 was overstated by 0.7 million, the closing inventory increases profit, because when we are calculating the cost of sales, we'll say opening inventory 8 purchases less closing inventory. If the figure for closing inventory is big, it means it reduces the profit. So the profit for 20, it increases the profit. So the profit for 20x4 was increased by 0.7 million, because that 0.7 million was there in the closing inventory. And also, what does this mean about this 0.7? This 0.7 was also present or was also included in the opening inventory of 20x5, because the closing inventory of 20x4 is the opening inventory of 20x5. So now we have to correct that. So the opening inventory reduces profit. So this 700 included in opening inventory of 20x5, and the opening inventory is also in cost of sales. So as we have said, the opening inventory reduces profit, so we need to increase the profits by 700 for this year. So credit the cost of sales found in the statement of profit or loss. Then we cannot debit the cost of sales of 20x4 because we are not doing 20x4. Rather, we will debit the retained earnings. That is the opening retained earnings as at 1 January 20x5. These are found on the statement of changes in equity. So debit 700. As I said, I will be working in thousands. So the 700 is 700,000 or 0.7 million. There we have reduced that prior period adjustment. That is the prior period error. Prior period corrected. Now let's go to note number 2. Note number 2, we are told the provision relates to a court case in existence. Where is the provision? We are given the provision here at the 1 January for 4,500. That's the opening provision at 1 January 20x5 for 4,600. Then we are told here the provision relates to a court case in existence since December 20x4. MIMCO settled this case on 31 December 20x5 for 6 million. The full amount was credited correctly to cash, with a corresponding debit entry being made to the suspense account. So now we'll say what was processed or what was done. The accounted, debited, suspense, with 6,000, as I'm working in 1,000, and credited bank with 6,000. So the bank, the line for bank was correct, but the entry for the leg for suspense was wrong. Now we need to correct that entry. How do we correct that entry? So write correction here. We will have to credit the suspense by 6,000. The accountant was supposed to debit provision because there is an opening provision there in the statement of financial position that we saw in the trial balance for 4,600. Then what does this mean? It means in 20x4 MCO under provided for this case because MCO provided 4,600 whilst it ended up paying 6,000. So the under provision will debit the provision, but in this time not the statement of financial position, but the profit or loss of the difference between 6,000 minus 4,600 or 1,400. So we are done with note number 2. Now let's go to note number 3. Note number 3, we are saying income tax figure in the trial balance relates to the under or over provision from the previous year. this is the figure that we are talking about, income statement 140. So this 140, it means it's an under provision, so we need to expense it this year. So that is good. We'll expense it when we come to the statement of profit or loss. Now let's go down to that note. The current year tax is estimated to be a tax refund of 1.2. So how do we generalize the tax refund? We recognize an asset, so it's an income tax asset at the statement of financial position, because normally the regulator doesn't refund, but if it refunds, then we have to credit our asset in debit bank. So now we debit income tax asset of 1,200 and credit income tax expense now in the statement of profit or loss. So we reduce the statement by that much. This is corporation tax done for the year. Then we are also told in that note that in addition to this, the deferred tax liability at 31 December 20x5 is estimated to be 8.2 million. So the provision at the beginning of the year was 7.7. So now at the end of the year, the provision for deferred tax should be 8.2. So if it should be 8.2, so we need to credit, because we are increasing the liability, we are crediting the provision for deferred tax in the statement of financial position. We are increasing our liability to 8,200 from 7,700. So the movement goes to the income tax in the statement of profit or loss of 5,000, like that. That one is the movement in deferred tax. Then we have finished with that note. Let's go to note number 4. Note number 4 is saying on 30 September 20x5, MCO made a 1-for-4 rights issue. The exercise price was $3.50 per share. So how many shares are there now? Let's go to equity share capital of $1.60,000. So there are 60,000 shares in thousands. So say number of shares issued. We are told the existing number is 60,000 multiplied. They issued 1-for-4. So we multiply by 1 divided by 4. So they issued 15,000 shares. The share price was $3.50. The share price was $3.50. Then total proceeds should be 15 multiplied by the share price. Total proceeds were 52,500. Now, what happened? The proceeds were correctly accounted for in cash, with a corresponding entry being made in the suspense account. So what was done? What was done here? It means there was a debit as the company received money. There was a debit of this amount 52,500, and also this amount was credited to the suspense account as 52. We'll come back to the suspense account once we are done. Then now the correction. Now we need to correct. We are told that the bank is correct because the company received money of 52,500. Now the correction, we need to debit the suspense. We need to debit the suspense account with that figure. Then we need to credit the share capital because shares were issued. We need to credit the share capital. The share capital will be crediting by how much? Let's go back to our trial balance. We are told here the share capital is $1 nominal. So if it's $1 nominal, and here the share price was $3.50, so it means we'll say the number of shares that were issued is 15 multiplied by $1, we get 15. We will also credit the share premium. The share premium will say 15 multiplied by, we have removed the dollar here, so we are left with $2.50 as premium. So share premium should be credited by 37,500. We are done with note number 4. Let's go to note number 5. Note number 5, we are saying M4 acquired investment property at 20,000 cash and decided to use the fair value model to account for investment properties. Investment properties are covered by IAS 40 investment properties. Now, what happened here? What was done here? Let's just put what was done. Even if it was correct, the company would have debited investment property, statement of financial position of 20,000. I'm working everything in thousand. Then credited bank $20,000 like that. Then now we are told as the property is expected to have a 20-year useful life, depreciation was recorded on this basis. So the company also recorded depreciation. We also know if it's fair value, there mustn't be depreciation, but the company should recognize the gains and losses in the fair value, but not to depreciate the investment property under IAS 40 under the fair value model. So now let's record depreciation. That is what was done. Depreciation was debited in the statement of profit or loss. Depreciation of how much? The investment is 20,000 divided by 20 years, as it was purchased at the beginning of the year, 1 January. So the depreciation was 1,000, and also accumulated depreciation was credited in the statement of financial position of how much? Of 1,000. Now we need to reverse this depreciation. We need to reverse this depreciation. So let's put the correction because this depreciation was wrong. So we need to correct that. So if we need to correct that, we need to credit depreciation we need to credit depreciation in the statement of profit or loss, then and debit accumulated depreciation in the statement of financial position, like that. Let's continue with the note. The fair value of the building at 31 December has been assessed to 22 million, but no accounting has taken place in relation to this. So the fair value was not recognized. Now we need to recognize this fair value increase. So the fair value increase will be recognized as we debit the investment property, because the investment property has increased from 20,000 to 22. So the increase will be 22,000 less 20,000. So we will increase the investment property by 2, then credit the investment income in the statement of profit or loss of 2,000. So the investment property is found in the statement of financial position, like that. This is the fair value adjustment. Now we are told all depreciation and amortization is charged on a pro rata basis to admin expenses. So this depreciation that we are reversing, we have to reverse it from admin expenses. Now let's go to note number 6. Note number 6, we are told MCO incurred a number of expenses in relation to brands during the year and has capitalized the following costs as intangible assets. So let's go to our intangible assets. We have our intangible assets as 3.3 here under note number 6. We are in note number 6. Now 1.3 was incurred 1 April to promote one of the major brands. So promotion is not a capital expenditure, rather it is a revenue expenditure. So what we will do here, we'll just correct. So first of all, do the journal as I am teaching. So I'll do every step. What was done here, the company had debited intangibles, that is as at 1 April, in the statement of financial position, all 1,300 and credited bank with 1,300. But this was wrong, because the promotion is not a capital expenditure, rather it is a revenue expenditure. It's promotion. So here what we have to do, we have to reverse this intangible asset. So we credit intangibles in the statement of financial position with 1,300 and debit promotion of brands in the statement of profit or loss 1,300. We have made the correction. Then let's move to the second note. What was done here in the second note, 2 million cash was paid on 1 October 20x5 to acquire a brand from one of the competitors. So now this brand at this date was acquired. So what did the company do? Like what it did in April, the company debited intangibles 2,000 and credited bank 2,000. This was correct. This was correct. Then Mimco expects the brand to have a useful life of 5 years. Mimco intends to sell it after 5 years. At the point of sale, it is estimated that the value of the brand will have increased, and so no amortization has been accounted for in the current year. So the company failed to account for amortization, so we need to account for amortization of that brand. So now, how do we account for that amortization? We will debit amortization in the statement of profit or loss. How much is the amortization? So the intangible is 2,000. We divide this 2,000 by 5, as the brand is expected to have a 5-year life, but the brand was acquired mid-year. It was acquired in October, so we'll say October, November, December. So we'll have to prorata by 3 divided by 12. So we'll amortize only $100. Then we'll credit accumulated amortization in the statement of financial position of the same figure. Then we are done with note number 6. Now let's move on to note number 7. We'll write 7 here. Mimco paid a dividend of 4 cents per share on all existing shares at 31 December, recording the dividend paid in administrative expenses. So now let's first calculate how much dividend was paid. So total number of shares at this date, total shares at this date. Initially the shares were 60,000 and the company issued a rights issue of 15,000, so the total shares were 75,000 at this point. Then the dividend per share was 0.04. Let me fix that. Then the total dividend paid, is now 75 multiplied by 4. We get 3,000. This was paid. Then what did the accountant do? The accountant debited admin expenses by 3,000. The admin expenses, where are they found? They are found in the statement of profit or loss. Then and credited bank with the same amount. The admin expenses was wrong, so we need to correct that leg here. So how do we correct that leg? We credit admin expenses statement of profit or loss, and debit dividends paid. Where are they found? In the statement of changes in equity, like that. So we are done with all the notes. Now let's quickly complete the statement of profit or loss. That is A. The statement of profit or loss, let's quickly complete it. We have all the figures now. Revenue we have got revenue of 24,300. There is no adjustment for revenue. We have got cost of sales. The cost of sales, we are given the figure here 11,600, but we did adjust the cost of sales in our first journal here, where we said we will credit the cost of sales by 700. So come here and say less 700, like that. So we'll say 11,600 less 700. We sum up that. What do we get here? We get gross profit. Then we go to admin expenses, or abbreviate admin expenses. Then we have 10,900. Let's go adjustment by adjustment. We have got this 3,000 that we said we have to correct by subtracting 3,000 from admin expenses. Let's go up. We have got this amortization, where we said we have to add 100. So add 100 here again for amortization. Let's go up. We said to debit the 1,300 for promotion of brands. So let's debit 1,300 in admin expenses. Investment income doesn't go to admin expenses. Then we say to credit depreciation of 1,000 from admin expenses, as all depreciation goes to admin expenses. Let's go on top. We also have got the provision that was under provided last year in 20x4. We'll add it, we'll debit, we'll add it to admin expenses. Then we are done. Then now let me write them neatly here. 10,900. We reduce by 3,000. Then we add 100. We add 1,300. We reduce by 1,000. Then we add 1,400, like that. Done. Then we go to distribution costs. There's no adjustment on distribution costs. Our distribution costs comes as 7,300 here as a negative. Then we will have our other income or investment income. Under investment income, we are told here we have got 500, but we have to add another investment income that comes from the investment property. We said we'll credit by 2,000. So say here 2,000. Then we'll have 500 plus 2,000. That will be 2.5. Then we have our finance costs. Our finance costs we are given here is 1,400. Then when we add here, what do we get from gross profit? We add all these figures. We get profit before tax. Then we add tax. The tax now let's open bracket. We have got the 1.4 here, the 140 here, that we said it's an under provision from for 20x4. Then let's go and find another tax where we did tax. We did tax here. We said we'll add 500 for deferred tax and subtract here under income of what, 1,200, the refund. So what we'll do here, we'll say 140 minus 500 plus 1,200, like that. Then we can sum up that. When we sum up, we get the profit for the year. We are done with the profit for the year. We have just gotten ourselves 12 marks. Now we want to do the statement of changes in equity. Our statement of changes in equity, I'll abbreviate it as share capital, share premium, retained earnings. Then balance as at 1 January 20x5. The share capital we are given in the statement, in the trial balance here is 60,000. There was no share premium. The retained earnings given is 43,200. But we had a prior period adjustment here that we needed to correct. We said we debit the retained earnings by 700, the opening retained earnings by 700. So we say prior period adjustment, we will less 700 there. When we less 700, we will have restated balances or the adjusted balances, whereby we will sum everything here like this. Then we will have the profit for the year. We have the profit for the year here on top. We also have the dividends. That were 3,000. Then we also had the share issue. Now the share issue, how much went to share capital? Let's go to our journal. 15,000 went to share capital. How much went to share premium? Let's go to our journal. 37,500 went to share premium. Then at this point, we can sum up. So we sum up from here, from restated balances. We get that figure. We can copy it across this side. So this is what was expected of us to get 5 marks. Then how easy it was. Then now let's also do the cash flow extracts. So I'll just abbreviate extracts here. We have got investing, we have financing, we have done all the journals, so we'll be looking at our journals. Here we paid a dividend of 3,000. So a dividend is a financing activity. So we'll say dividend paid here. The dividend paid was 3,000. It's a cash outflow because it's a dividend that was paid. Let's go again on top where we have got bank. We bought an intangible for 2,000. So that was a brand. So we say purchase of brand 2,000. Let's go to our journal. Where there is bank, we'll pause and consider. We paid for promotion of 1.3. So the promotion is not investing, it's not financing, it's operating. So we'll not consider this cash flow. Let's go up. We also have got bank. We purchased the investment property of 20,000. So this is an investing. So purchase of investment property, we said it was 20,000. Let's go again on top. We have got a bank here of 52,500. This was the issue of shares. So let's go up. Issue of shares is financing. Issue of shares. It's a income, money coming in 52,500, like that. Then we have to sum up these. We have to sum up these. So we'll sum like that. These were the extracts that we were expected to do for 3 marks. How easy they were. If you have found this video useful, please consider subscribing to my channel so that you will get every notification and every update of the videos that I upload. So I expect you to be practicing these questions. Maybe if the approach of journals worked for you, that would be great. But I expect people to do more questions, pause the video, read the notes, and then do it time and again. You will succeed. Thank you for watching.